Where will the crypto market be in 10 years from now?
Hopefully completely transparent and invisible to the end consumer. If we do our job well in this infrastructure and this technology becomes the underpinning of our financial services, at the end of the day, as a consumer, when you run a payment at the grocery store, you couldn't care less how the payment rails operate or who has a corresponding bank relationship with what other entity. We do believe that we will get there, and definitely within 10 years.
Welcome to Blockchain North, everyone. I'm your host, Flo. Today, I have a great interview lined up for you. We're going to be speaking with George Bordianu, co-founder and CEO of Balance, which is a crypto custody firm from Canada. I'll let him introduce himself in just a second. But as usual, if you want to support us, if you like our interviews, make sure to follow us, make sure to subscribe to our channels, subscribe to our newsletter too. It comes out every week. In fact, we've been sharing some of Balance's jobs a few times already. So, and there's also events in the newsletter. And also, as I always say, still till the end, because at the very end, I'll be asking George for his surest predictions for the crypto market in the coming years. So I look forward to that answer. George, welcome.
Thank you so much for having me here.
It's a pleasure. It's a pleasure. How are you doing today?
Good. It's been a very busy time for us over at Balance, but it's also been a very exciting time for us over at Balance. We'll get into that a little bit later on, but the let's say we're getting close to the pinnacle of the last 3 years worth of work that's been happening in this company, which as tiring as it could get, sometimes it gets everyone very excited internally.
Why don't you introduce yourself now briefly and tell us a little bit about your journey into blockchain and why you co-founded Balance?
So I am the co-founder and CEO of Balance. We're Canada's oldest and largest digital asset custodian with over 2.5, closer to 3 billion worth of assets under custody these days. We got going in 2017, and for these types of let's say, I guess, infrastructure plays, it does take a significant amount of time and effort to build the platform early on before it truly is institutional ready, and you can take the type of clients that usually show up with 8 or 9 figures worth of assets. Nonetheless, we've been very diligent at building throughout the years, and we're very proud with where the business has gotten in today. Uh, Myself, like I come from the technology side of things primarily. I'm a software developer by trade, let's say, or by education. I have a bachelor's in computer science. I have a master's in computer science. I spent 2.5 years in the reasoning and learning lab over at McGill, working under Doina Prekop, who was the dean of undergraduate studies at the time and now runs the DeepMind out of Montreal. Nonetheless, at some point I shifted gears and I went away from AI and then eventually backed our way into finance. So we focus on product and technology because this is what the client sees at the end of the day. But we've been putting the work in to make sure that we'll learn everything that pertains to us as far as the financial services industry and the associated regulations and obligations go.
Mm. For anybody who doesn't really understand crypto or even finance, how would you explain what Balance actually does and why it's important in 30 seconds or so?
We hold assets safe. If you have Bitcoin, Ethereum, any of these digital assets, we generate and manage the private key material. We hold exclusive possession over it, so you know that we're the only organization that can actually effect transfers. Nonetheless, the assets are entirely yours. You retain the full legal and beneficial title. You give us instructions to move them to a different address. We're going to confirm them and process the transfer.
And again, simply put, how does it work? Because I think people would be very clear if we were talking about gold, we would imagine these very big vaults, these very big doors, that protect, your physical gold. How does it work with crypto tokens, for example, like Bitcoin or Ethereum?
There is a little bit of the same 100%. And what I like about digital asset custody, for example, is that you do get to combine the best of both worlds. You get the physical controls that you typically have in traditional finance. If, for example, you're a gold custodian, so we do leverage vault infrastructure. And I guess to answer your question, the key material itself that controls the assets is generated on special purpose hardware, which sits fully offline in bank grade vaults that are access controlled, monitored, and guarded 24/7. This is what we call offline storage, and there are obviously less secure forms of storage that you could opt in for. But as far as the core solution goes, special purpose hardware kept in bank grade vaults. we mix the physical controls. The vaults are access controlled, guarded, and monitored 24/7, 365, with the digital controls. If somehow an attacker manages to break into one of those vaults, besides the fact that there are pallets of cash and gold bullion on the floor and plenty of stuff to take, even if you do get to that electronic device that sits somewhere in a corner, you wouldn't be able as a standalone to do anything with it because it requires various sorts of credentials, which obviously wouldn't be in the vault in order to operate the device and effect the transfer. So, to some degree, there is a high amount of risk in the space since you're dealing with irreversible transactions. Once something gets broadcast to the
Mhm.
blockchain, it'll go to that destination. It can no longer be stopped. From another point of view, we do get to combine both the physical and the logical controls, which brings an added level of security versus keeping gold safe, for example.
And who are your clients typically? Are we talking about companies? Are they only crypto companies? Do you also cater to individuals?
We started with individuals, but then what we slowly learned about the business is as a custodian, it's an extremely high risk, low margin business. So we had to navigate upstream and start engaging larger and larger clients. These days, it's mostly about private funds, single multifamily offices, ultra high net worth individuals. There are some monthly minimums associated with using our platform in order to cover some of the fixed infrastructure costs and the staff and the vault trips and so on. Usually for us, it's a typical, let's say, 10 to 20 million worth of assets in custody. If the client brings them over, they might move the needle. Less than that, it'll probably be within the monthly minimum that we charge.
Okay, so I'm probably not a client for Balance then.
If you want to, I'll gladly grandfather you onto a zero fee rate as we did for some of the old retail clients, but depends on how much we have. I don't know.
You're not going to make a lot of money on me, I suspect. But anyway, that's off topic. So, Georgia, we're speaking at a very special moment for Balance. From what I understand, you've been going at this for many years, and you just reached an important milestone, I believe, with a trust incorporation. Could you explain again, in layman's terms, what that means and what that means for Balance, but also what it means for Canada and the crypto market?
Um, Almost at trust incorporation, but the biggest challenge for us over the last couple of years has been what's called the lack of qualified custodian status. The To make that in as simple terms as I can, there are certain types of clients which we can serve. Like I've mentioned some of them: private funds, trading desks, ATM networks, high net worth, ultra high net worth individuals. Not an issue. They usually come to us. They ask if are we SOC certified, are we insured, is the platform safe, and that's usually good for them. There are regulated clients such as broker dealers, Canadian investment advisors, public funds. Some of these ETFs, mutual funds, and alternative investment funds that you've been hearing about are now getting approved in various jurisdictions, which have requirements from their own regulatory bodies with respect to what the custodian where they hold the assets needs to meet in terms of requirements. Now, it's not a license to get, so it's not as if I could go somewhere to say I want to become a qualified custodian to be able to, I don't know, hold BlackRock's next Ethereum ETF. Um, it's a criteria to meet. However, because historically speaking, banks and trusts have been doing this business, most of the regulatory instruments that go into who can hold those assets usually start with you have to be a bank or a trust or a bank or trust affiliate. And after pitching joint ventures and partnerships to various banks and trusts for many years, we decided at some point that it's time to, it's better for us, I guess, to take the long journey and incorporate our own trust charter, as complicated as that might be. And, like I am very glad to say, and I will have more about this in the coming weeks, hopefully. We are nearing the end of the journey with Alberta's Treasury Board and Finance Minister, which has granted one of these charters before in Canada and hopefully will grant us the second one.
Yeah. Well, congratulations for getting this far. That's quite impressive. And we know how difficult, the crypto market can be and how complex it is. And without going into too many details, can you give us a sense of your journey to get to where you are today? Like, what are maybe the big steps that you had to take? You said you chose to, take the long road, let's say, rather than, go for the quick wins, I suppose.
Very early on, we decided to build our own platform and technology solution. We chose to forego vending in software vendors like Fireblocks or Ledger Vault not because there's anything in particular wrong about their security model or their solutions, but uh, the way we would like to drive the business, it would have prevented us from having the necessary control into how the custodian operates to be able to build the services that we'd like to build on top.
Hmm.
Uh, so challenge number one for the first, being realistic, like 3 years of operating this business, has been to build a platform and technology solution to a degree of safety that we can engage these types of clients and confidently tell them, look, it's, if you have 50, 100, 250 million to custody with us, you can bring it over and we'll do a good job at it and it'll stay safe. um, Having that recognized, and by recognized I mean having an independent auditor look through all of these controls, understand how they're designed and what their effectiveness is, and whether those controls are sufficient for us to satisfy the representations that we're making to clients and stakeholders. That was the second very big challenge. Typically, the gold standard in the industry is called the SOC 2 certification when it comes to security and more. A SOC 2 has 5 pillars. The core one is security, typically referred to as common criteria, but we also touch on availability, privacy, confidentiality, and processing integrity. It took us 3 years to become SOC 2 Type 2 certified. We had a SOC 2 Type 1 for the first 2 years while our auditor became deeply familiar and intimate with the design of our controls. And then finally, this year, around March 31st is the report date, we got SOC 2 Type 2 certified, which is arguably the gold standard when it comes to information security and keeping a strong compliance program in place. Uh, the third and last, I guess, big challenge for us has been getting the regulatory structure in place needed to be able to serve the kind of clients that we need. And by that, I specifically mean this trust charter. Incorporating a trust is not an easy task. It's not as if I can go to the ATBF and fill in a form and create one the same way that you create a private corporation on Corporation Canada's website. It's a lengthy process. You do have to build a plan of operations, including projected financials for the next couple of years, to a level of detail and depth that it satisfies the regulator that you understand the business that you're operating in the space that you're in, and the plan itself is viable, and they will be dealing with a stable entity, not someone that will be revising their plans every 6 months. Uh, we approached the ATBF with what we thought at the time was a complete application late August last year, with like a few hundred pages describing everything from our policies and procedures to compliance controls to agreements that we'd be using with clients. Nonetheless, there has been a significant amount of back and forth and a lot of learning for us in the process. And now, close to a year later, we can confidently say that we're done, and like we have the pieces needed to take it to the finish line. But uh, a lot of these challenges you can only assess how difficult and what was required in retrospect, since you don't know what you're looking at before you actually start the work. Um, like we've gotten used to it at this point as an organization that this is what it is, and good things take time to build. Nonetheless, none of them are easy. So, uh, like we continue to stay diligent and try to take it to the finish line.
Yeah. Could you speak a little bit to your why, like why you're doing what you're doing? And I think the best way you could do that, if possible, would be through a story or through some examples of situations you've seen where you thought, oh my, we really need to like fix this problem in the industry. Do you have these kinds of examples of, maybe catastrophic situations where perhaps a lot of funds were lost, or or fraud, do you have one or two of those short stories to share with our viewers?
We had plenty in Canada, and I guess the most prominent one that most Canadians are aware of is the Quadriga CX
Yeah.
disaster, where, and it's not just necessarily from an asset safety side of things, because what happened over there was pure fraud, but one of the centralized trading platforms, the largest one in Canada at the time, ended up losing about 250 million worth of funds. Some of them the founder traded and used for personal purposes, and given the opaque structure of the business, no one could figure it out until the very end. Some of them were literally locked on a computer with a password that no one was able to retrieve after the founder apparently died of Crohn's disease over in India. So, I, now, granted, that was many years ago. The infrastructure is a lot more mature these days, so you wouldn't expect this level of types of failures within the industry anymore. Uh, for us, like what ultimately drives us is it started as a curiosity and to some degree a little bit of a hubristic or product and engineer people within the core team. How complicated could it be to build a custodian? And then fast forward 7 years later. um, but we have been seeing very early on in the market that there was an interest into the asset class. You had the trading platforms, you had a few ETFs that got approved in 2021 at some point, and Canada has been at the forefront of those. And unfortunately, billions worth of client assets, a bunch of them coming from retail investors, have been moved over to the United States because of the lack of local solutions. So most issuers like Purpose Investments and 3IQ and Devolve and Galaxy and CI Digital, they all currently go to BitGo, Coinbase, and Gemini, holding all of the client assets and at the end of the day, the savings of Canadian retail investors. Um, we don't see this as a, like, if the industry keeps developing, like we don't see this as a good thing necessarily. The the yes, there are neighbors, there are friends. Uh, Nonetheless, there's absolutely no reason as why we wouldn't be able to build this kind of infrastructure locally at home and serve our own needs. We've also realized, and I'll be quick with this. Uh, there have been a couple of upstarts, and we're obviously not the only competitor in the space that have been trying to build a solution in Canada from the ground up, and most of them have failed to date. We hope that we're going to succeed with it, and time will tell. But like we realize that we are one of the few groups that actually has the chops and is positioned well enough to build it. So even there might be more profitable lines of businesses or things to do. We This is the value and this is our contribution to financial services space that we want to bring. So we'll stick to it until we get it done, and we have what we need in Canada to stop going over to the United States.
Well, that's music to my ears, and I think to many Canadians, of course. I mean, we know that we're often vulnerable because a lot of our manufacturing, a lot of our, even you could say our military is, we're mostly dependent on U.S. protection. I mean, if we were attacked by a major player, I don't think most people have too much hope in the Canadian Army. Sorry, Canadian Army, for saying that. It's mostly a question of resources. But speaking of Army, I want to ask you a bit of a dramatic question because I feel like that will fascinate people. What happens to the crypto funds that you are custodying? I guess that's the word, or that you have custody of on behalf of your clients. What happens if Canada was bombed, for example? Does that pose any particular threat, or and what do you have in place to mitigate those threats? What has to happen, in that moment when the first bomb lands on Toronto, God forbid?
Um, I'm laughing because I used to live within the what we call the fall zone within Toronto. The fall zone within Toronto is if the CN Tower falls down, are you within the radius?
Oh, really? I didn't even know that existed. The fall zone. That's
the,
both funny and tragic.
the Toronto fall zone. We obviously have all sorts of redundancies built in place, and backup.
One of which I imagine is that you're not in the fall zone.
Yes. So, or you might be in the fall zone, but you also need to be outside of the fall zone as a custodian. Um, we do have two fully independent and redundant backup systems. One that's vendor specific, one that's vendor independent when it comes down to the offline storage. And the backups of the private key material, they're kept across 5 bank-grade vaults across Canada that span East Coast to West Coast. Now, it is all Canada for good reasons. Like it's a design choice. Like we could very easily diversify and hold backup material in the United States or even Europe, but we decided to keep it everything within the country. And with that said, the land mass is huge. So if you go East Coast to West Coast, a lot would have to happen before we would say we've lost all effective backups and all of the hardware devices, and there is no way to recover the funds, and we've lost the funds. Um, I guess not to get too much into the weeds, but to make it more specific, every time a new wallet gets created on our platform, the key material exported in encrypted form through both backup systems is kept on three FIPS 142-level 3 compliant storage media drives, and then at least three of those drives live within a tamper evident enclosing, and then two of those enclosings within a vault, and then 5 volts across Canada. So we are looking at 2 times 3, 6 times 2, 12 times 5, 60. We have 60 effective copies, 30 from each of the backup systems that we have that span across 5 volts, distinct, two physical distinct locations in each vault within Canada. So, like once again, let's say, God forbid, something happens on the East Coast, we still be able to recover from the West Coast or from the prairies. Now, nonetheless, if all of Canada sinks, all of Canada sinks. I would argue that we would have bigger problems then than how do I recover access to my Bitcoin. But
That's a good point, of course. Yeah. Now, so it's interesting because there's actually quite a bit of physical infrastructure from what you described. You're never going to tell me where that is, of course, although now I know that it's in potentially up to 60 different locations, whether those are physical or some of them are just virtual locations. But in any case, maybe if I just, keep roaming around Canada, I'll bump into one by coincidence. But more seriously,
just to clarify, because it
yeah,
is an important point. We're obviously like we're a technology company, we're a digital asset custodian. We don't have our own vault services infrastructure. I didn't go and build 5 vaults across Canada. We work with a very large private security firm. Now, to your point, I'm not going to disclose which one, but what I will tell you is that they handle anywhere between 5 and 10 billion worth of cash pickups a day from the large scheduled banks around. So the same infrastructure that our big five use, RBC, CIBC, TD, and so on, to hold their valuables, this is the exact same infrastructure that we leverage.
yeah.
It's as safe as that. Like past that point, you typically mitigate with insurance.
I excuse me. I want to double tap on something that may sound quite granular, but I'm curious, and so I imagine others might be too. What kind of a team do you have to manage what you're describing right now? Like, how many people work for you, basically? Maybe perhaps you could share a little bit on how many partners you're working with or suppliers, and
Mhm.
also what's your biggest cost?
As it goes with most organizations, biggest costs tend to be payroll, and then it's payroll, insurance, and software services and the infrastructure afterwards. Um,
I'm
we do
I'm
want to
surprised, to
say,
be honest. I thought you were going to say infrastructure one.
no, so it's people and personnel.
How many people?
To make a long story short, so we do operate very lean. We have about a dozen full-time employees, and then all sorts of contractors around QA and UI/UX and mobile development and so on. Uh, we will use a lot of professional services, and I'll tell you a bit about philosophically, like why we like to run the core team as lean as we do. When it
Hmm.
comes down to professional services, we do have 6 law firms on retainer, 4 audit firms, 2 expert compliance groups, and 1 tax group. Now we can scale these resources and we can dial up the commitment up and down. Like when it comes to regulatory compliance or legal work that we have to do on various pieces, it's a lot better for us to outsource, even if the costs are arguably higher than bringing someone in dedicated in-house full-time. Because look, at the end of the day, company is the people that are within the company, and we've been in places before that scale up fast, and then they have to do 25-30% reductions in forces every time there's a downturn, and we don't like to build that kind of environment, and that's not the kind of morale that we want to bring to the team at the end of the day. uh, Professional services we scale up and down as we need. The core team we keep lean. It might sound extremely small to some of the listeners if they say, look, with a dozen people you're securing billions worth of assets. I will tell you, if you take a look at the rest of the custodians and their core teams, even Coinbase and Gemini and Anchorage and some of the large ones, they're roughly the same sizes, or maybe 50, 60 people is what you'd be looking at, like when it comes to the core team that's building the system. Um, for us, given the line of business that we're in, we like to run at cash flow break even or profitable at all times. We've been on the venture path before with other businesses. I don't like the client to have to worry about how much runway does the custodian have, and do they make enough money, and can they hit their growth targets to raise the next round of funding and so on. From the client's perspective, we've been around for 7 years. We plan to be around for another 15, 20 if the market supports it. And like, we're resource constrained only to the in the sense that there are always new features and products and services that we'd like to build that we don't have the ability to build. But as far as the core custody platform itself and what we're doing for asset security, I can confidently say that it's on par with the large ones that you're going to find in the market.
It's an interesting insight that stretches beyond crypto. It's an entrepreneurial insight, a choice that you're making. I mean, I'm running a business too, and yeah, I definitely want to build my core team. I call it my core team. I think you use that term as well. But there's other partners that are also part of our team in a different capacity. And no, I understand the reason. By the
Right.
way, this is your second time founding of a business, from what I understand. So is was that a key lesson, and can you maybe share one other lesson that you learned, and maybe trial by fire, maybe you were burnt and now you're like, I will never do this again. You're
Well,
smiling already.
yes, because this is all of the mistakes that when you start the journey, you say you're not going to do, you inadvertently run into them in some form or shape. So, um, look, like what I guess just to riff a bit more on the previous point, uh, it is the core team. If I'm to add up the board members, the advisors, the directors, shareholders, like all the people that are involved with the group that will work for the group in some shape or form, like we're probably closer to 25, 30. But
Yeah,
just to be fair, but
it's about the
the
same ratio for us, by the way. I would say it's about 50% core team, 50% contractors, but yeah.
um, the first business that we built was in a completely different it was early in my career. We were starting eight kids, myself and three of my friends, co-founders, so four people co-founding team. We were building something in the social local mobile space. This was back in the days when Instagram was just picking up. We used to call it your extra life. So what we ended up building was a social network following followers asymmetric model, where we would give people a quest tree of real life challenges. So, say you picked an aspect of your life that you're interested in developing, like cooking, we would start giving you challenges like cook pasta and then take it all the way to organize a three course meal for six of your friends. You had to take photos to post them as proof that you've completed the challenges in order to unlock the next challenges, get experience points and titles and badges. And it was a very big hit in the beginning. Like we went 0 to 150,000 users in the first 7 weeks after launch. Apple flew us over to the headquarters to give us a tour. We got featured on like the big landing page in the US and the Canadian stores, 77 other countries. We thought we were on a rocket ship for a couple of weeks, and then we integrated Mixpanel. We took a look at the metrics around retention engagement, and we said, okay, this is going to require 3 4 more years of hard iterations on the product, which is wasn't something that like any of the team necessarily wanted to do. So um, to sum up, a lot of playing house with the first business. Even if the product was great, we're just kind of learning the ropes when it comes to fundraising, when it comes to structuring a team, when it comes to launching something publicly and marketing. All of those lessons we took them to heart, and like I've been using them in the other businesses that I've been involved since, and then most definitely over at Balance. So we're a lot more realistic, a lot more pragmatic these days about what is a business there to do. A business is there to deliver value for clients, and the simplest way you measure it is if the client pays you. And otherwise, like it's all likes on Facebook and followers on LinkedIn, and like all of the big news and the awards and the usual industry circuit that gets put around. We couldn't care less about it, and like we're past those stages. If Forbes calls me tomorrow to do 40 under 40 or whatever they want to do, like would probably say no thank you, which we have been multiple times to
Yeah.
those types of endeavors.
Yeah.
So
So you also moved your business to Calgary in January this year, I believe. So just about 6 months ago. Why did you move it from Toronto, which seems to be the big tech and finance hub, to Calgary? I mean, I know a little bit about Calgary, but I suspect a lot of people might not know or might wonder why you moved your business there, and what basically makes Alberta as a jurisdiction, since there's also a level of regulation that's provincial, an attractive hub for digital assets.
mhm. um, it was a strategic business decision for us. We not to go too deep into the regulatory weeds, but on the province of Ontario lacks a provincial trust framework. So there's no such thing as a provincial. I guess there is a provincial loan and trust corporations act, but it's a small one, and all it says is you need a federally regulated trust under OSFI, the Superintendent for Financial Institutions, which regulates banks and trusts and more at the federal level, in order to do this kind of business within the province. We've
Mm.
explored that path, and the regulator itself, OSCE, isn't necessarily entirely warm to the space just yet, which is entirely understandable. But then also us as an organization, we wouldn't, we did a hard look and said, look, these are a lot of requirements and a lot of resources if we're to try to build a federally regulated financial institution. So instead, we decided to opt on the provincial path and say, look, we're going to build a provincially regulated financial institution because it's arguably a little bit more lightweight. And we've landed on Alberta as the jurisdiction of choice because Alberta's Loan and Trust Corporations Act offers a very flexible framework. They have this concept of a special purpose trust charter where you can say, look, I want to do a trust entity, but I don't want, for example, to do deposit taking business, which is taking title on client assets and investing or lending them. That's not what we do. We're a crypto custodian. The assets sit with the client. So can you please put a restriction on this charter, reduce some of the regulatory capital requirements, reduce some of the requirements, eliminate some of the requirements, for example, that you'd have to satisfy when it comes to deposit taking, such as potentially registering with the CDIC, the depository institution in Canada. So Alberta's framework is flexible enough to allow us to do the work that we need to do and not much more on top of that, just because of the way certain regulatory instruments are drafted. It is true that Calgary is not Toronto when it comes to financial services. With that said, I've been quite pleasantly surprised since I arrived in. There is a lot of buzz and a lot of excitement and a lot of companies moving into the space, particularly in financial services. Calgary used to be known historically as an oil and gas and energy hub, but software and financial services have started emerging as a sliver of the economy. They used to be like a 1-2%. Now it's in the 5 to 10% range. So Calgary is becoming a destination for large, like fintech players such as Neo Financial uh, and many others, and us included to some
Yeah.
degree. Now, we're
And
large
of course,
because we've moved.
yeah, and of course, having a significant oil and gas industry and the royalties it generates and all that makes it also de facto some kind of a financial hub. I mean, there's a lot of trading that happens there, as I understand.
It, it,
Um,
gives me- it gives me this feeling of New York in the 20s, 30s. Like it's still a little bit rough
because
around.
you were there in the 20s or 30s, or
No, but I've seen photos, digitally edited. Uh, it's it's still rough around the edges, but there's a lot of buzz and excitement, and there's a lot of young professionals and new people that are moving in cross provinces and from outside. Calgary went from 1.6 to 1.7 million population just last year. So highest growth city, highest growth province. So because you have all of these people moving in and all of this cross pollination happening, the industry and the businesses are emerging as well. So it's you want to be at the place that's growing, not at the place that's stagnant. So
yeah.
this
And there's
this
some great restaurants in Calgary too, and of course you have the Rocky Mountains. I mean, it's the quality of life is very high there as well. So, what's next for you? Obviously, this full trust incorporation. I guess when do you expect that? And after that, what are the big milestones from there?
The process itself, it's a two-step process. The first step is called incorporation, which is where the regulatory body, the Treasury Board and Finance, issues a public order to create the entity and then hand it over to us for managing. And then we have to do a little bit of work. It's our typical hold the first shareholders meeting and a first board of directors meeting, appoint various committees, put some policies and procedures in place. And then eventually there is a site visit that the regulator does where they actually come in and spend time with the team and spend time in the office and want to typically see a demonstration of all of the systems in the core transactions that you'll be doing with the client, from generating wallets to transferring assets, before they issue a second order, which is called, that's the registration, where once that second order is given, you are allowed to commence operations and start engaging with the public. Uh, Obviously, I can't speak for the regulator, so at the end of the day, they control the timeline. So we'll see how quickly this happens. From our point of view, we're done with the incorporation work, and we are speed running to the finish line, to the registration line, and slowly getting ready for that site visit. So fingers crossed, maybe at some point this summer we will have something concrete. They'll go out in a public press release where we'll say, "Come over if you're a broker dealer or a fund issuer, and we can now engage and we can chat." If it doesn't happen within a month or two, it's not much further down the line either.
No.
So
And now we've recorded this, so we'll be able to look back and go like, he was right or he was wrong. But anyway, as you said, you've done your part, and it's not in your hands anymore right now.
I
So
am
if we,
a conservative flow, by the way, with some of these timelines because I've learned that lesson the hard way. I recall, to your point, very early on in 2019, I was on a stage in front of 350 people when we were graduating out of Techstars, saying, "We have the SOC auditors, we have the insurance, we have the platform in place. We're almost ready to get to qualified status." And 5 years later, we're just getting there. So
wow, yeah, that's a reality check, and I that resonates with me as well. One of the expressions they say is, I think it was from Bill Gates. People overestimate what they can do in a day, but they underestimate what they can do in a year. And so, yeah, in 5 years, you've done a lot, but still, it's a long time. So, I mean, I can't speak to a crypto leader without asking you a little bit about your perspective on the markets. I don't necessarily mean financial, but if you have any thoughts, they're welcome. But more generally, like, what are the biggest trends? Like, what are let's just make it this way. What are your top three mega trends in the global crypto industry today?
Mhm. I would do a disservice to the industry if I wouldn't start with the core use case, which is digital commodities and digital currencies. So I'm looking at Bitcoin, Ethereum, and a few other ones. Some of these projects that were launched as early as 2008 and 2009. We are slowly getting to quote unquote crossing the chasm into mainstream adoption. And what some of the investment vehicles, such as the ETFs that were approved and launched in the United States a couple of months ago, we now also have spot Bitcoin and Ethereum ETFs on in Hong Kong as well. You have ETP products that have just recently been listed on the London Stock Exchange about 2 weeks ago. We're not done seeing what that does to the market, and some people were definitely hoping for it. I don't know if anyone necessarily expected it, but these products are slowly becoming the most successful products for these very large asset managers such as BlackRock and Fidelity. I believe actually after the last 2 3 days of inflows, that's the Fidelity's ETF is at about 13.5 billion worth of assets under management, the Bitcoin ETF, and it's Fidelity's largest ETF out of all of them that they manage. We're still seeing 500 million, close to a billion worth of inflows per day into these products, and I don't believe we're done with them. The more the retail public indirectly at the end of the day, even if through a structured product, gets exposure to the asset class,
Mhm.
more this asset class will penetrate, and eventually we're going to get all of the use cases in payments and remittances and like all of the applications that people have been dreaming since day one once they read that Bitcoin white paper. So this is the core adoption of the main assets, Bitcoin, Ethereum, and maybe one or two more, is a big trend, and this one is unfolding as we speak. Separate from this, there's a lot of talk about what people call real world asset tokenization. So, taking, for example, a stock or a bond or even a mortgage or some property and turning it into a tokenized fractional offering of sorts, where you might be able to one day go to some broker dealer and say, I want to purchase 0.5% of a particular property. Not entirely sure how well that's going to gel within the some the existing incentive system. So I don't know if I fully buy that pitch, but I definitely buy the tokenizing bonds and stocks pitch and settling them through these near real-time settlement systems where you can achieve finality within minutes or seconds on some of these networks rather than the typical I'm going to mark up my spreadsheet and that other bank's going to mark up their spreadsheet, and then within a t plus one, t plus three, t plus one these days, we're going to settle. Reducing settlement time reduces counterparty risk. Reducing counterparty risk usually tends to lower interest rates and just
Reducing fraud, by the way, too.
reducing fraud. So it makes the system a lot more efficient if we actually transition from the old school financial infrastructure that we've built back in the 60s and 70s into this real-time settlement systems. Uh,
That
the
was two. So what's the third one?
I'll give it a third one too, and some of the viewers, might find it peculiar that it comes from uh, me wearing a shirt and talking about institutional custody and adoption. There is a lot of buzz and excitement around some parts of the space meme coins, which people take a look at them these days, and they look silly, and a bunch of them are over the line in a lot of ways, sometimes even legally, like with some of the projects. But nonetheless, that's where the current edge is, around meme coins and NFTs and some of the, not to put everything within the same bucket, but at the frontier of the space, we are seeing some interesting new models that are emerging in terms of what people can do with the asset class, and like eventually, once those use cases and regulation properly arrives in place, they will end up disrupting certain industries such as loyalty points, for example. I recently just took a flight over to Austin for Consensus. I'm playing with 5 applications, having to take my Aeroplan loyalty member number to put it into the United application, so the points on the flight going to the, that will all eventually get streamlined through some of these tokens. And there is something to be said about a vision when um, that stakeholder economy, that's being pitched the wrong way and with the wrong implementation, in my view, actually becomes viable. So, for example, you go to the grocery store, you buy Colgate because this is what you brush your teeth with. You should be earning some Colgate points that maybe you can redeem eventually for a discount, or maybe you can use to pay for other, for your next dental visit. uh,
Yeah.
will take years until we get there, but it is interesting. So I'm keeping, let's say, 5% of my focus on that part of the space, just to see what happens.
We're running out of time, and I want to ask you one final double question. So I ask you for the shortest answers you can provide. What is your surest prediction for the global crypto market, or perhaps for Canada? You can choose in the next 1 year.
Well, I've told you this one before, but every 10 minutes on average, there's a block that gets mined on the Bitcoin network. That's the shortest prediction that I can
But I
make.
guess it's a way of saying that the market will still be there and that the industry will still be there and doing its thing, basically.
Yes, I believe where we're at right now, and I'm not talking about just price action, but the latest level of adoption that's happened into the space that got Bitcoin to a, let's say, 70,000 ES price level. uh, this is the new stable level. I don't believe we're going to go back to seeing Bitcoin at 10,000 ES or anything of the sorts. So those big booms and busts, um, now they will have these institutions that are coming in, the space should be a lot less volatile, and the industry and the technology isn't going anywhere. I'm a technologist at heart, once again, and what attracted me to the space is the fact that behind the Bitcoin white paper, there is a fundamental computer science breakthrough when it comes to achieving consensus within a decentralized system.
Hmm.
And
And
it's not a good question.
I was gonna ask you what if you follow the markets, but you've pretty much answered the question already, and obviously you do. Final question: where will the crypto market be in 10 years from now, and what role will it play in the world?
Hopefully, completely transparent and invisible to the end consumer. If we do our job well, and this infrastructure and this technology becomes the underpinning of our financial services, at the end of the day, as a consumer, when you run a payment at the grocery store, you couldn't care less how the payment rails operate or who has a corresponding bank relationship with what other entity. uh, we're not there yet in terms of UIX. We do believe that we will get there, and definitely within 10 years. If it doesn't, then we've failed as collectively as an industry.
Hmm.
So I'd very much like to see the financial services infrastructure rebuilt from the ground up with a digital asset vision in mind. And besides the people that work in the space, no one should necessarily care how the systems work behind the scenes, as long as they deliver a consistent experience.
And where will balance be in 10 years?
Still here, hopefully, still Canada's oldest and largest custodian, hopefully more than a custodian. Our vision is to expand into post trade financial services, into clearing and settlement, which will require other types of licenses that are complicated to get. So the custodian is the cornerstone of our vision. It's taking us a long time to achieve it, but that's the start of the journey. That's not the end of the journey.
And hopefully we'll have interviewed you at least a few more times, perhaps once a year or something like that. George, thank you so much. This has been a lot of fun. I have to disclose that I've understood almost everything you said, despite some of it being a little bit technical for me, of course. But I think there's some really powerful insights in what you just shared. It's also quite inspiring because we talked about entrepreneurship as well, and this is your, let's say, not your first rodeo, to use an Alberta kind of themed metaphor. And yeah, wish you all the best, folks. If you enjoyed this interview, you know what to do if you want to support Canadian blockchain, crypto, but also crypto media, which is us in that case. Give us a follow, subscribe, and also if you have questions for George or for me, put them in the comments. We will relay them to George. If you did not like the interview, tell us why you didn't like it. We're open to your feedback, and I think we both have thick skin. Yeah, be safe, and see you next time. Ciao, ciao.
Much.